G'day guys, I'm Tor from Pro Stock Tips, and today I'd like to tell you about how you can invest your super your own way without the use of a self-managed superannuation fund. To do this, you can create a Superhero Super account. So the link is in the description below, and this will take you to Superhero, which is a stock trading platform, an Australian stock trading platform that is. And through Superhero, you can also set up the Superhero Super account, which will allow you to take control of your superannuation and invest it where you decide. So to do this, it's a very simple process with little verification required. You simply need details like your tax file number and say your driver's license. And it only took me about 5 minutes to set up a Superhero Super account. And you can, when configuring your account, it will automatically allow you to select an option to transfer your superannuation from your existing super fund into your Superhero Super account. And this will only take about 2 to 3 days to come through, and you should receive all of those funds. Now, some of your funds will go into a global diversified index, which I find disappointing, as you know, you'll probably receive minimal returns from that. However, with the control account, which is the one you want to select the control account. You can also, from there, allocate something like 80% of your superannuation into stocks and shares of your choosing, which is what I've done. So there is a certain amount of available instruments. So it's not going to give you penny stocks, unfortunately, which is where I'd like to put most of my money. But there is many options available, and a lot of the options are good, and it will allow you to trade these stocks and shares freely. You can only select up to 20% in a particular equity, so there is some limitations. You can't just go and put all of your money on one stock, but that's a good thing, right? You don't want to put all your eggs in one basket, as then you could potentially lose all of your super, right? And now the reason why you might be interested in creating a Superhero Super account is because potentially it depends obviously where you've invested your super currently, but many superannuation funds underperform with growth rates of up to, say, 5% per annum, which is absolutely dismal. Some potentially, like for example, during events like the GFC and the COVID pandemic, lost up to 50% of their clients' wealth, which is absurd because they should have made double that during those events if they had have actively traded and managed the investments, right? Which is what you will be able to do. So there is a limited range of stocks. So a couple that I've selected, for example, Sandfire Resources. I've invested quite a significant portion of my Superhero Super portfolio into Sandfire. I've created a video about Sandfire Resources. They're a copper miner, and currently previously their stocks have been trading at a price which factors in depletion of their mine and mineral resources. However, they've solved this depletion problem by potentially acquiring the Matsa mining complex in Spain. So this should provide continuity to their production of copper, which is their primary commodity which they're mining for. And I believe that Sandfire Resources could potentially reach $10 per share or more, especially in the booming copper market. I can probably cover that in a separate video as to why I think copper is a good investment, or copper mining specifically. Now, IGO. So IGO, I believe, is perhaps one of the top lithium mining companies within Australia on the ASX. So it's certainly one of the biggest. You've obviously got Pilbara Minerals, Orocobre, mineral resources, and IGO is right up there, with the world's largest, highest grade hard rock lithium mine. They have 25% stake in Greenbushes, which is over 2% lithium, in the ground. And, this is a great, one of the lowest cost hard rock resources for lithium mining. And it's already in production, producing, they'll scale up to somewhere like 200 kilotons plus. IGO should be able to produce more than 500, have a share of more than 500 kilotons of that. And, they've also got a fully automated lithium hydroxide refinery in Kwinana. So they own a 49% share in that one. So, essentially this puts them into one of the premier lithium miners in Australia. So I believe it's still a great investment. And if you look at their projections, their projected EBITDA out to 2025, you'll see that they project that they should be making, $1 billion of EBITDA per annum from there on, potentially higher if the lithium rally really takes off. So, I think given their current market capitalization, their dividend yield and their, price to earnings ratio should be really favorable in 2025. So I certainly think this is a blue chip stock of the future. They've obviously got great exploration and development projects. So, I really think IGO is pretty solid. So happy to invest in them at these prices. But if it comes down, it will allow me to, as my stake will in that company will go down, it will allow me then to invest more funds. So I'll be able to buy it at an even lower price if it was to come down. BHP, obviously, with copper, iron ore, expanding into potash, that looks all right. Electro Optic systems, you would just see I made a video about this. They're certainly looking into expanding into space. So that's quite a remarkable stock in terms of potential, especially if they do launch these optical relay satellites into space and create some sort of optical space communication network, which will relay back to Earth and transfer. Obviously, it could potentially transfer a lot of internet and data, which could be quite accretive to future revenue. I mean, this is certainly a great opportunity. Currently, they're profitable and, in my opinion, potentially undervalued given their previous all-time highs. They're now earning significant profits again. So I think they can revert back into a bull run, with some good news, and perhaps when their full year reports come out, provided their earnings trajectory stays really positive. PPK Group, I like this stock as it's lithium. It has a large stake in lithium sulfur energy, so that's lithium sulfur batteries, right? And at this stage, I'm looking to finding out some more information from them about their boron nitride nanotube loading of their battery cells. However, and potentially what sort of cost factor, these cells will come in at. But lithium sulfur seems to be potentially the way of the future in terms of batteries, potentially displacing the current, all the current varieties of lithium ion batteries could potentially be replaced with lithium sulfur in the future, as its potential to be a superior product in terms of energy density and cost. So, that could potentially be huge. Rio Tinto, obviously that's your iron ore, and obviously Oyo TOLGI, so big copper mining. Oh, and not Jansen, that was BHP. Jadar, so their lithium project, or lithium borates project. So that's quite an interesting project. You can invest in MGX, Mount Gibson Iron. Now, this is going to be producing so for example, you might be worried about investing in iron, as obviously iron is in a downtrend at the moment. And potentially many people, analysts, expect iron ore to trade at a much lower price in the future, which might not necessarily be the case, but if it is, you're going to want high grade, because obviously the high grade attracts premium, and Mount Gibson Iron, now that they've completed their stripping, should potentially be producing 65% plus iron grades, and exporting them for a very low cost, right? You don't have to transport this iron all across the Pilbara to a port. It's already on an island, so it basically is just loading up the ship and sending it to China or wherever is importing this iron ore, that is. So, and Mount Gibson certainly has potential, has a lot of cash. Not sure what it's going to be doing with that cash, but it's got a very high cash ratio at the moment, and potentially they could be looking at acquisition, something like that, some way to return value, return that capital to cash to shareholders, or grow in terms of acquisition or some sort of project to expand their business, hopefully diversify even. That would be interesting. Mineral resources, that's diversified. So you've got obviously iron ore. However, it's not necessarily high grade or low cost. They're certainly earning a lot at the moment, but with iron ore prices in decline, that could present a huge risk to mineral resources, and it's on a significant downtrend at the moment. However, if iron ore prices do make a comeback after the Winter Olympics, then certainly it seems that mineral resources has an enormous amount of potential, especially because they will be switching on and commissioning a lot of their Kemerton lithium refinery, which is co-owned by Albemarle, one of the largest lithium producers in the world. So mineral resources will have large scale lithium production in a refinery capacity, as well as hard rock mining at Mount Marion, and also if they can restart their Wodgina mine, which is right up there in terms of resource with, say, Pilbara Minerals. So there's certainly a lot of potential there with mineral resources. As you can see, Pilbara Minerals is trading at a similar market capitalization. However, mineral resources already has refinery capacity essentially, and obviously are virtually equivalent in terms of hard rock production capabilities. So mineral resources is attractive in terms of valuation in comparison to Pilbara Minerals, especially because their current earnings is far higher than Pilbara Resources. So same with IGO, right? A lot more earnings. They've also got their Nova Bollinger, their nickel, copper, low cost nickel, copper production. So I certainly like IGO and Min much more so than Pilbara Minerals, especially IGO, that, as I mentioned, is one of the top ones. I would probably wait before I open a position in mineral resources, potentially, for it to go lower on this downtrend, because then it should hopefully bounce back quite substantially. And then I might sell some off, never know, right? Westgold, for a gold miner, includes some gold there in the superannuation in case gold trends up, which obviously a lot of people are calling for. It could go down, but a lot of people are calling for, say, 2,000 plus gold, in which case Westgold, is in a prime position, certainly seem compared to how much gold it's producing and its current costs. It's trading at a very low valuation, or I guess price to earnings ratio for a gold miner of its size. It does have a significant resource. So I don't know, I think, if gold prices just simply stay at their current levels or go up, it's undervalued. It's a good gold play, certainly compared to many of the other gold stocks that might be well overvalued. Westgold seems more on the undervalued side. So that's probably the larger cap gold producer that I'd be looking at. Not to say Newcrest isn't good. Newcrest also looks all right. With all its expansion potential. So Wafi Goldpoo, for example. And the last one I've listed here on my list to talk about is Austal. Obviously the shipbuilder. Just by looking at the chart, they look like they're at a spot where you might be able to buy, and then potentially if this rally, their previous rally repeats, obviously you could get some sell off at the peak if it does return into a rally mode. Then Austal looks like, a good stock to try and establish a position on and then free carry it, depending on whether it rallies like this. So there you go. There's certainly a few larger cap stocks on their available instruments that you could potentially invest in and obviously outperform your existing superannuation, especially if you take care of trading your share portfolio yourself and don't leave it to underperforming funds. Essentially take control of your super and invest it your way.